And by end of January, I had exited nearly 70% of my Indian equity exposure. 2025 has been a very tough year for the markets, but with positioning, patience and a bit of luck, it turned out to be a great year for me. This is really important because everything I did later was a response of how risk evolved from here. Let me show you how my portfolio allocation looked on 1st January 2025. This is not a flex video. This is a logical first portfolio breakdown backed by numbers, decisions and mistakes. I'm not showing this so that you can copy my portfolio allocation. I'm showing this so that you understand how intelligent investors think about allocations and capital deployment. I'm breaking down my entire 2025 investment portfolio, not just to show what I actually own, but to show how I think. 2025 has been a very tough year for the markets, but with positioning, patience and a bit of luck, it turned out to be a great year for me. Just remember that this came after years of learning, early bad decisions and experience. 2025 started with extremely negative sentiments. Indian market had peaked by September end 2024 and then a lot of issues came in 2025 like India-Pakistan war, Trump introducing tariffs and mass exits from foreign investors in the Indian market. So this year was more about risk management and lesser about returns. Let me show you how my portfolio allocation looked on 1st January 2025. Indian equities were 67%, US equities were 14%, liquid funds that is cash was 14% and fixed deposits were 5%. This is really important because everything I did later was a response of how risk evolved from here. Also, I don't invest in mutual funds currently. I think they are excellent for passive investors, but as an active investor who tracks markets and enjoys direct decision making, I prefer investing directly in equities. Now coming to what had actually happened during the year. In early January, there was a sharp sell-off underway when the Nifty 50 Small Cap 250 index broke the 17,000 level. That was my signal to cut the risk. Small caps generally move faster in both directions. They outperform in the bull market and fall much harder in the bear market. So I exited around 50% by 10 January 2025. And by end of January, I had exited nearly 70% of my Indian equity exposure. I had moved this capital into liquid funds because at that point, protecting capital mattered more to me than being brave. From February to mid-March, Indian equities were in free fall. Earnings were also weak and growth visibility was very poor. So re-entering early made no sense. So one rule that I follow, when earnings are unclear and price damage continues, capital preservation comes first. So I waited patiently. During this time, I started spending a lot of time studying US markets, mostly AI. In April, when I thought of deploying some funds because the small cap index PE was below the long-term average of 30 and fallen to 27. But then, at the same time, Trump introduced tariffs on India. So naturally, I had to wait more. At this time, the US stocks had also corrected a lot. And a lot of AI companies which I felt would dominate the second half of this decade were available very cheap. And thus, I started aggressively building positions in US AI-focused companies like Nvidia, AMD, Micron Technology, Microsoft and even Amazon. Now at this time in India, I had missed some pullback that happened between April and mid-May. But I only started deploying when the small cap index reached close to 16,000. That's when I started deploying selectively in 10 to 15 conviction stock picks. By June 2025, this is how my portfolio allocation looked. Indian equities were 33%, US equities were 52%, liquid funds were 10% and FD was just 5%. I was expecting recovery in the Indian market post the September 2025 earnings cycle because historically Indian bear markets last around 12 to 15 months. But that didn't happen. Luckily, small caps didn't fall much after June and mostly stayed sideways. Though, because of selective stock picking in the second half of 2025, it delivered a very strong performance for me. Some of my top performers were HBL Engineering, AU Small Finance Bank, Aditya Birla Capital, Interact Building, Thanga Mile Jewelry. And now, finally, coming to the part that you all have been waiting for, my 2025 returns pre-tax in Indian equities were 24%, US equities were 56%, liquid funds were 5.5%, and fixed deposits, because of small finance banks, 8%. And one major point that I missed was the entire commodity rally of gold, silver, copper. Even though they were consistently rising, I wasn't comfortable investing in them because of lesser knowledge. So I just avoided the FOMO and focused on what I understand well. So this was my complete investment execution for 2025. The allocations, the exits, the patience and the re-entries, and the logic behind everything. Also, if you want a follow-up video on my top winners and top losers of 2025 with exact reasons why I bought them, just comment portfolio below. Thank you for watching and Happy New Year to all of you.